We should be live
Okay.
in a
Oh,
second.
I'll see the numbers. Yeah. Okay. Fine.
Yeah, we are going to get the t-shirts very soon, so we are going to send you one as well. So we are all. Ken's going to get one as well.
Oh, that's nice.
So we are all in the same match. Hello, guys. Hey, Chaitanya. Hey, JB.
Hello,
Hey, everyone.
everyone.
How are you doing, guys? How's your week so far? Let me notify the Discord and Telegram community so everyone knows we are live and we can dive in.
Yes, sir.
Okay, and also the Discord. Let me see.
Okay.
Perfect. Okay, let me open the chat. Very good, Jake. What about you? Yes, all good. Took only one trade so far. I don't know why I'm hearing myself. Probably some sort of echo. Just one trade, close on break even eventually. I was trying to trade the euro pound toward the upside, but till Ken comes back, I can confirm the theory with the market sentiment. So let me share the screen. Share, and here we go. The trading view, perfect. Angel, can you confirm that you see my trading view?
Yeah, hold on. Hold on a second. Oh, not yet. Okay, now I can. Yeah, you're good to
Perfect.
go.
Okay, guys, so you can go watch the Monday's live stream, and I told you that's going to happen. Didn't buy again. The same like with the first gold trade. Nevertheless, again, when retail sentiment is trying to sell on the top, and the market is overall oversold on the retail side, which is like 70 plus of retails are trying to squeeze the shorts, and it happened here 6 p.m. here was the beginning of the live stream on Monday, and I told you that the chances that we are going to create new high on both Euro USD and GBP USD again, which is Monday here 6 p.m., that we are going to either create new high or reach the 1.178. Again, 8, the numbers, 3s and 8s, add it to your analysis because it works perfectly for me. And we actually did on both EU and GU. And unfortunately,
guys, I'm starting to think that Jake is a market maker.
Not really, but I would love to be. And what I tried to do today was basically buy the euro pound in this zone. Eventually, I got back on break even because whenever I'm like 15, 20 pips in a profit on at least those EH signature accounts, I just place my stop loss to break even. So this was the only trade that I took. I'm kind of afraid what's going to happen tomorrow on the ECB rate decision. So that's why I'm not opening that many euro trades. But I'll be talking about pound today, probably. I might be entering few pound trades. Today I booked 2%. The Animal Kingdom. Well, good for you. Well
Yeah,
done.
that's great, guys.
Yeah, 2% is really nice for on one day. Just so you, if you are interested, guys, today I was recording the account review because one of the members of the risk team shared a post on X recently about the Malaysian trader who did $33,000 on a $25,000 account. So he did about 150% growth or profit in 3 weeks, 4 weeks. Really impressive trader, and he was also trading gold, just buying gold, holding it for 2 weeks. He caught that momentum, and he made about $33,000. Actually, it was 36, but the payout was 33 because he's got 90% profit split. At the same time,
Ken.
he caught the momentum.
Hey.
Oh, Ken is here. Hello,
How you
man.
doing?
How are you doing?
Yeah, good, man. Good, guys. Good. We're matching Angel colors today, greens.
Should have told me. Could bring a great
Sorry.
green t-shirt as well. We were just talking about it with Angel before you join in that we are working on a new match. So we're going to send you as well as to Angel a t-shirt. So we basically match on the live
Oh, the new
streams.
team.
Let's go. Yeah, let's go. That's
Yeah, these
fire.
are cool, man. Love them.
Yeah, we've got this one as well, the black one, which says trading 6 figures in my pajamas, which is also kind of cool. But yeah, we're gonna have a new ones very soon.
Love them. Yeah, that'd be awesome.
Let me see what the chat say. I love to trade gold. Yeah, on that account review, guys, I was talking a lot about gold because recently, especially with that bullish momentum, I don't know, Ken, if you've heard it, but we had a trader that I reviewed today who did $33,000 on a 25K account, and he did it just buying gold, micro lots, and just buying. Made $250 move on gold, caught it, hold it. He held it for 2.5 weeks, and then closed it.
Beautiful.
Absolute unit.
Was that a funded account?
Yeah. He did he got the payout of $33,000.
Oh, nice. Wow, that's some decent ROI there.
Yeah, it was the first account he bought. So initial cost for him were like $200 for the evaluation, and getting $33,000 in payout from it. It's that's absolutely beautiful.
Oh, hats off to him. Whereabouts is he based?
He's Malaysian.
Nice, cool, man. Oh, good on him.
Okay, so let me open also the chat on the right side.
We need to check the know, or just to find out the way he trades, because I heard about a strategy which is called Malaysian support and resistance. I'm not sure if you guys know about it, but it's some sort of this strategy with candles and very, very precise levels of support and resistance, which is crazy. Okay, so I will be really interested to know the way he trades, because it works mostly with gold. So yeah, it's called Malaysian support and resistance. It's crazy.
Well, his account was about 90 days or 90 trades, where just going to draw down a few dollars, going to profit a few dollars. Eventually, after 90 trades, he ended up like $500 in a drawdown. And then on 20th of August, he heavily bought gold and closed it 2 weeks ago with a 36K in profit. So I sent him an email if he's willing to do an interview, which I would love to, just to discuss how he got into that long or those longs on gold. And what is his strategy? So we'll see. At least we'll have the account review very soon on the Ian Markets YouTube channel. But the interview would be definitely worth it.
Yeah, man, definitely. Yeah, that'd be highly insightful. Interesting. Be interesting.
What is the name of the strategy, Angel? Angel, you said it's Malaysian support and resistance, right?
Yeah, Malaysian support and resistance. That's pretty much the strategy. You guys can find a lot of videos on YouTube, and you will see just pretty much lines on candle bodies. And then you see the trade with that is just like a week. Yeah, it's just great. So you guys need to look into it. It's different. It's completely different.
Okay.
Sounds good.
Yeah, I was just analyzing the euro pound because I took trade today, end up on break even on the E8 account. Ken, do you have any analysis for euro pound? Because I was trying to just where the price is right now, more or less. I have the buy zone here, and I was trying to again buy a swing trade back towards the new higher highs, which are currently on these highs from 0.868, which is like 50 pips. Because I believe we're not going to break below on daily the 0.65, where the price is now. So I would be interested if you have any analysis for it.
To be honest, I don't.
Okay.
It's a bit choppy at the moment for me.
Yeah.
I don't.
Okay. Okay.
Yeah, sorry, man. The thing is,
no problem.
Yeah, I think. Yeah, I don't. I think no. If I'm genuinely honest, I think we could potentially come back down towards 86 weekly support down there. If I'm honest.
Oh, all the way down here.
Yeah, to 86.00. I think it's possible at the moment. Euros. Maybe we get that bounce post ECB at 86.00. Just because Euros lost a little bit of ground versus some of its peers across the board with this the French mess at the moment, the French political mess.
Yeah,
I don't think that's helping. So yeah, but post ECB maybe it gets a little boost. But yeah, I don't know. I think it's going to come down before it goes up.
Yeah, I just wanted to, if we get a little bit higher, so I would set the stop loss and break even nevertheless. But yeah, I also said that tomorrow we've got the ECB, which could be very interesting. So I'll be probably focusing on the pound, which still kind of like the GU. If we're going to break above, what is it? 4 hour. This is 1 hour. And I still believe, because I checked the sentiment, we are still pretty bearish on the sentiment on the retail side. So I still think that we can create new high highs and go above 1.36 level, especially if the dollar weakness will persist. Then it's about 70 pips from the current price.
Okay. Yeah.
So this would be probably what I'd be looking for. I don't want to now open any more trades on euro because the ECB. So what I'm being left with is the USD Swiss franc and the pound and dollar. And I kind of like as well what USD and Swiss franc is doing right now, because we got some sort of a correction. We are heading back towards the 0.8, which is very solid level. So I'd be watching this very carefully in case I'll see some sort of a pattern on lower time frames. I would be open to go for the shorts for some swings on US dollar and Swiss franc.
Definitely. I'm aligned with you. Yeah, we have got a big bounce here. There's a lot of demand, 79.50, 79.00. Yeah, I'll be interested in those potential shorts as well. I was waiting for a breakout sort of that 79.50, 79.00 area, but if we can print potential lower high with this pullback right now, I'll be in line with you on those shorts. Like, why the hell not?
You've got also like fair value gap here, which is anti speciality, but the fair value gap, the 0.8 level, as a lot on this level. I mean, there's plenty of resistances that can basically.
Yeah, I'm with Jake there. Definitely, that looks good.
Okay, so I'm going to continue analyze the market. Ken, if you wouldn't mind, would you share the screen?
Yeah, let me share.
Yeah, perfect.
Yeah, for me, the last sort of
focus on one pair right now, GU. That's a good thing. Quadri, focusing on one pair.
for my majors.
Oh, sorry, you were you were lagging, so I didn't hear you.
Yeah,
it's yours.
Yeah, here, let me just share my screen now. It always, I don't know, for some reason, every time I go and share my screen, it starts trying to lag out. There we go. I'm all good though, yeah?
Yeah, you now good.
Yeah, it's been very choppy for me. Obviously, naturally, on a daily basis, I'm looking for swings, but I'm not getting those swings. It's very choppy at the moment. I'm not finding enough divergences at present, and my intraday sort of liquidity sweeps are not coming into play with my majors. So it's been a bit choppy. On my E8 account, I'm down 0.5% right now. At present, I do have a position at the moment in gold, which I'll start off with what I'm active in and what I'm looking at, and then we'll sort of give a sort of demo overview of the market. So obviously, as we all know, gold is very much erect. We're highly bro, look, you may laugh, but that is grammatically correct. For the definition of erect. We are very erect right now with gold. So yeah, I took these longs early morning. Obviously we're structured to the upside, as you guys can see. We had another fundamental, by the way, guys, that support gold. I don't know if you saw Qatar. Let me just quickly type it in here. You saw basically Israel had launched some strikes in Qatar, okay, and basically, obviously, this is causing a little bit of geopolitical tension as well. It's why gold had that bid. It's why we've seen the bid today. We've pulled back a little bit, but that's helping gold. So we've got another support mechanism here for gold as these geopolitical tensions intensify. We've still got right now Russia Ukraine, which is going on. These guys are still going at it, and nothing has slowed down. If anything, things have intensified with Russia and Ukraine since Trump met with Putin in Alaska last month. So there's a lot of fundamental support for gold. It's just it's trying to. The annoying thing is here for me, we've slowed down momentum. I had this, obviously we're trending to the upside, high highs, high low. I got in after this new higher low here. I waited for this break here, this descending channel up, because we broke structure. We formed a double bottom, 1, 2. The neckline was here, and I entered after this bullish candlestick. And now we just died. I was happy because we were pushing, and now we've just sort of tailed off here right now. So not looking over attractive, as long only overly encouraging, but as long as structure holds, I'd expect this to take that pop to the upside. But it's just pure consolidation right now. I've gone a little bit quiet, but we do that before we get a continuation. So I've got that running right now, which is sitting at BE at present. Another thing that I'm looking at, which is of interest to me at the moment, is Euro CAD. Okay, which again, structure is very much intact. You guys would have seen bring up Forex Factory here a moment. Last week, I just want to show, and we've spoken about how weak the Canadian economy is right now. If we just go to last Friday's jobs data, we had a massive contraction there. A lot of jobs lost in the economy, 65.5K. The unemployment rate jumped up from 6.9 to 7.1%. And, when we look at, for example, CAD GDP, it's been very much hit and miss, large miss. So I like these shorts, and obviously we've got a bit of sensitive fundamentals right now of euro around the French government.
Yeah, we didn't hear you for like past 15 seconds. For
yeah,
20 seconds.
We lost you for a second. Yeah. But you're back now. You're good.
Yeah.
Okay. So okay, I'll go back to. Did you hear me on what I was talking about? CAD, Canadian dollar.
Can you repeat that again, please?
Yeah, please.
Yeah, so on Canadian dollar.
Yeah, you
can pretty much repeat. Exactly.
Yeah. So I was just mentioning how I'm liking the look of EuroCAD longs right now, because the fundamentals for Canada are bearish.
Okay.
Yeah. So when you look at CAD labor market data last week, right, we had a massive contraction with jobs. 65.5K jobs lost. Unemployment rate jumped up to 7.1%. And as I was saying as well, the Canadian GDP, when you look at CAD GDP, we've been contracting. Okay. And we still got a contraction on a month-to-month reading. Look, bam, 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 consecutive contractions for Canadian growth. So I expect this to continue and respect structure where we're printing these high highs, high lows. Obviously, as you can see, we just got this consolidation going on right now with EuroCAD, and I'm expecting this to eventually break out. I will look at longs potentially on this break retest here, take out these highs, and then go clear. When you look on the higher time frame, it does get a little bit choppy around this sort of 63 area. But the way fundamentals are right now, there's no reason as to why this can't have a nice extension to the upside and replicate some of these moves in towards 66.50. So I like the upside here. Potentially look at those tomorrow post ECB rate decision. Yeah,
looks good. That looks good. I would like that.
That's interesting.
I don't see how Canadian dollar could get stronger. At least
no, man.
It didn't happen in the past weeks, even months. So I don't think there's going to be some trigger for Canadian dollar to, for some reason, get bullish. So yeah, I like that. I like that.
Yeah. So that's on the watch list. So gold and EuroCAD right now, what I'm sort of active interested in. Yeah, euro. I was gutted really, because again, we were talking about this on Monday where things were looking promising for a breakout of this freaking range. And just, again, it's just caught within all this chop. So it's very, very directionless, which on an intraday basis has made it a little bit even tricky for me, because I want to see really nice clear trends. With my liquidity sweep, when we've got I've given you classic examples of those. When we get those, if we're in a bull move, then I'm looking for a sweep of the low for a continuation. If we're in a bear move, looking for a sweep of the high for a continuation south. I mean, we haven't had it really. Okay. We haven't really had it for me. And obviously my windows are London and New York, and it's just been too rangy, choppy for me. So it's been a little bit of a quiet or not so lucrative period at present, but it's just this is normal. So yeah, so with a lot of dollar related, which are I guess my bread and butter, it's just quiet for now until we get a catalyst. I think markets are really waiting for a catalyst, and we will get that next week, guys. Okay, so next week, just a quick reminder, is obviously big because we got FOMC rate decision. All right, and this hopefully should be a catalyst for a breakout. I am hoping that they go and surprise the markets and cut by 50 basis points, because then we're going to get some nice moves and some nice trends coming back into play, and that'll be a catalyst to just dump dollar.
Oh, do you think that they're going to deliver 50?
I am optimistic. I feel like they could. I feel like they could. I don't know if you saw as well, the BLS, the Bureau of Labor Statistics, BLS, NFP, they revised was it yesterday? They revised lower the data. Yeah, look, revision down. So look, previous non-farm payrolls shows revision of 911,000 decrease for March 2025. So it just shows, what that shows is that jobs is actually been a lot slower than what we've seen in the data. It's been a lot slower. So I think that the FOMC potentially has room now to go and just deliver that 50 basis point cut, and then say to the markets, look, let's just take it decision by decision. If things deteriorate further, then we'll look at more cuts. But I feel like, these guys have been on pause for a long time. Yeah. They've been on pause for months. So they could deliver that big blow, that hammer blow for the dollar in terms of cuts. And I wouldn't be surprised if they do.
Do you think we can expect something different on tomorrow's inflation rate from US, or do you think it goes as consensus, as forecast? We won't get anything chubby?
To be honest with you, look, this is the tricky one now, Jake, because Powell said at the Jackson Hole meeting that inflation, he's not really, basically in a nutshell, he said he's not concerned about inflation because he's just said it's just transitory. It's just due to temporary factors because of the tariffs. But okay. So if this does come out higher, which it should, because those tariff effects are still coming through, then are the markets going to buy dollar? Is that because in theory they should, because it pushed back rate cut bets. But Powell said to us he basically doesn't care about inflation because it's just temporary. So are people just going to sell dollar anyway? So maybe if that comes out higher, maybe we do see a pop north for the dollar, but then it's short-lived because markets they're cutting anyway. I don't know.
Yeah, that's true, mate. That might be the case. I mean, if that pops higher, I think that the chances of delivering 50 basis points is going to get a little bit lower. So I think if we have higher inflation data than what is current consensus, then I think they're going to do the 25.
Yeah.
But still, I saw also the report, initial jobless claims from last week. They're terrible. I think these data are going to be terrible as well. So labor market is going to get smashed. So yeah, probably it's just about being careful in case that market would present this opportunity of higher inflation, if so, as a slightly bullish for US dollar. But yeah, it wouldn't be long term. It would be short term spike, and then probably we get back on a track with weak dollar.
Exactly. Agreed. Exactly.
Yeah. So I would wait for it. But at the same time, if we're going to get low inflation, could be very devastating for dollar.
Oh, 100%. 100%. That'll just be massive green light for some dollar devastation, as you say there. Just while we're on the topic of inflation, obviously, if a couple of months ago I was screaming, a big rant about Chinese economic slowdown, and just how markets completely disregarding inflation in China, right? We were talking for a while about these PPIs, how, producers' prices kept falling, and obviously they are still in deep contraction. However, they've improved a little bit from the previous. We had minus 3.6%, but you can see the trend has been very much bearish. And now finally, they've further filtered through into the consumers' prices. So for anyone that doesn't understand, the producers produce the goods that consumers consume. So eventually the producers' prices, when producers' prices are going up, typically that should filter through to consumers' prices, their costs of their goods. So the consumer price will go up. If PPI is going down, producer prices are going down, they're going to put down their costs, and then consumers' costs will come down, generally speaking. So finally, the consumers' prices have come down further into deflation, minus 0.4%. Like, this is a deep negative that we've seen in quite a while for China. Look, yeah, since February. And why this is bad is because it's a slowdown. There's not enough spending. If there's not enough spending, there's not enough economic stimulation. So I think markets are still disregarding this because they're not interested in everything's overshadowed by, FOMC, geopolitical tensions. But we're still not talking about global economic slowdown as we should be at the moment. It's not, markets aren't focusing on it, but I think it's a big thing. But anyway, AUD and NZD are unharmed by that data for now because they're like the best performers today. I don't know if you've seen, Jake, the reasons on your side, AUD, NZD, why they're best performers today.
No, I didn't catch it.
Yeah, I don't know. I don't know.
No idea. I saw it on indexes that for some reason the Australian dollar is 0.5% up and New Zealand dollar is about 0.30% up. Other currency pairs, as I'm looking at the indexes now, are just in a negative numbers. So I have no idea. Probably something with China. Need to check on that. Probably once Angel's gonna do his analysis, I'll take a look at it. But funny that you speak about it because I'm just now watching the pound with Australian dollar and pound with the New Zealand dollar because we got two very important levels there.
Yeah.
So I'll quickly prepare it. I'll check what happened with Australian dollar, New Zealand dollar, and after Angel's analysis, I'll dive into it probably.
Yeah. Okay. Yeah. Same. I'm gonna take a little look, but for now, I think that's pretty much it for me, guys. It's
okay.
Yeah, that's it for now for the time being. I'm gonna have a little look through as well.
Perfect. Angel, if you don't mind, would you share your analysis?
Yes, sir.
Perfect. Thank you.
Hoping to chat right away. Okay, so let me share this screen. I was actually
going to. Yeah, sorry.
I was actually looking at the DXY while you guys were explaining the date that I was about to release, and everyone in the chat gotta pay attention to what these guys are saying. But I'm not sure if you realize that pretty much most of the hindsights and the projections that we have since we started streaming have been working out really well.
That's
right?
True.
So that tells a lot about the knowledge, that is being shared here. So I'm really glad to be here today, guys. Thank you all. Wanted to start with that.
Appreciate it.
I was actually looking at the DXY, and I can see if you actually get just a deeper look here, we do have some sort of bearish structure because we do have a lower high here, we do have a lower low, and then we have another lower low, and then we kept going. So that tells me that this low, it might be a target right now. And we do have a break here of the current structure. So we can see this as a possible retracement on this gap here. So for tomorrow, I will want to see the price maybe a wick higher here, and then a movement back lower to take this low. So I will want to see this gap being respected from this current structure here. It's quite clear for me. Starting to look good. Then from here is when we don't know what's going to happen after this low. But it looks really, really, really good as a target now. It's going outside normal schedule. Let me just take a look to the YM US30 real quick. As you guys can see, we finally delivered from the daily gap. We do have a retracement back on the 50%. We rejected the area and we tapped into this high, which was the target. And I told you guys, once we take out that target, I don't want to know what's going to happen. I just want to wait, sit and wait. So we do have a nice displacement out of the gap. We do have a nice bullish structure taking this high here. So for now, as YM took this high, and I don't see what's going to, I don't really see what's going to happen here because we had this 4-hour gap here that is getting disrespected right after taking this high. So that makes me think that we might want to see a new sell side being taken. So it will be this low or this low. But since I'm still bullish, at least for NASDAQ, I'm just going to stay away from YM, right? I want to see something, some sort of sales right from here to this lows. This one and this one as a target. But since, again, I'm bullish, I'm going to be away from this one. All right, this is pretty much for the YM, nothing clear, just that. For the SP 500, very, very good delivery out of the range, out of this gap here. We did have that divergence in price between the lows between NASDAQ and SP 500. And we actually saw, as you can see, a delivery to this high, right? And I told you guys, if we take out this high, right, out of this gap here, I want to see a new dealing range getting in, which is this one. So this is a new dealing range. This is a new leg in price where you want to see a retracement to continue higher, right? So this is where you put your Fibonacci here, and you see what this is the 50% area. So the retracement shall be expected below this low here. And if we go to a higher time frame, this one is actually matching with what? A 4-hour gap, right? Clean, crystal clear. So I would want to see then tomorrow price trading lower, tapping into this gap, and then seeing a rejection and trading back higher into the highs, right? We already took the all-time highs, so you gotta be careful. But the way I'm seeing this one on SP 500, because I'm still bullish, right, is because if you look at the NASDAQ, we haven't taken this high from the left, so we haven't actually traded into the all-time highs yet, which is this one, and we are here as well. So this is the gap that I want to see the price holding to deliver through that high, right? This one here. This one here. Then overnight, I will want to see then some sort of rejection here from this low. And the price trading back higher. I want to see that high getting taken with the CPI tomorrow. It looks interesting, really, really nice. And actually, if we do the same thing, if we're seeing this as a new leg, as a new dealing range, and we use a Fibonacci again from here, from the low to the high. What is this? This is the 50% area. So this is actually a retracement that we can actually wait and expect a new leg, right? This is just basic bullish structure. So that's pretty much as for today. I did take a long, right? I got stopped out on break even, and it's funny because we've been trading higher since then, and I've been trying to take longs since last week, and I've been getting stopped out in the last 3 trades I took, and all of them are longs. And that's funny, because the market is still trading higher, but it's what it is. So let's see if tomorrow we can actually get involved in something, keeping that plan in mind. All right. Where's the chart? Okay, okay. So here it was. I wanted to talk a little bit about the trade that I took today, because my plan today, I wasn't looking at this 4-hour gap yet. Let me just go back to the all time frame so you guys can see. So my plan today was, okay, I'm still targeting this high, right? I want to see that all-time high. If you want to draw after that, okay, that's fine. But this now looks like a solid target for me, since like we're actually trading and aiming for that high. So today, when I was trading and after market opens, I can see this is a structure, right? So this is a high, this is a low, and this is a higher high. So this is dealing range. I want to see it, then a retracement back into the equilibrium, which was this leg here, this 50%. We traded back where? Into this gap, right? This is an hourly gap here. So I wanted to see a reaction from here. The price did not help because by that time, YM was already taking this high and it was trading lower. And then ES was kind of, like waiting to see what's going to happen. So the other indexes was not helping the price to actually get there. So it was kind of messy. It was slow today, and I took a long around 10 a.m. here. As you guys can see, that look at the way we tap into the gap, and then we've been kind of sloppy here, sloppy per section, but we do have a break of the structure, right? We do have a change in the structure from bearish to bullish here when we take out this high. You guys can see. So that's where pretty much I took my long. This is a long position. Yep. So my long was here, and I was actually aiming for this high, right? I wanted to see, of course, the all-time high, but that was my target. I do have a nice run. I hold the trade for like 30 to 20 minutes. I took a partial of like $200 kind of thing here. And right after I got stopped out at break even. I mean, that was fine. I just held the trade for that longer. It's really weird because when I'm trading and actually getting out of the trades on average for like 20 to 15 minutes, because indexes are really fast during this time. But tomorrow I'm going to be trading with the same bias in mind, with the same plan, because I wanted to see that hard get it taken. So pretty much that's going to be my condition for tomorrow, that 4-hour gap. Of course, if this gap gets disrespected, meaning there's a candle from the 4-hour closing below, right? Then I'm going to start, being more careful, because I really wanted to see that high. So we want to be careful about it. And for me to change the years towards the sell side, I will want to see then a displacement out of this low. If I'm not seeing a displacement, like something solid, win momentum, I'm not going to change the years. I really want to see the highs. So yeah, that's pretty much.
Okay, perfect. Thank you so much for sharing the analysis, Angel.
Yeah, of course.
Ken, I was just checking on the Australian dollar and New Zealand dollar because I was very surprised by the momentum today. I didn't have a time throughout the day. So basically, there are a few factors. The first one being that based on the expectation that Federal Reserve will resume in the monetary easing, I think sentiment turns favorable for the, let's say, riskier assets, which is Australian dollar, New Zealand dollar. But then, which I think is more important, is tomorrow's data. We're going to get the consumer inflation expectations, which are not highlighted as important, but on the last RBA decision, Bullock said that she would need to see easing in inflation in order to deliver another rate cut. So I think that the market is expecting that the consumer inflation expectations are going to be still at 3.9, which is the current data, which are the current data. So if it's actually going to be 3.9, this move on Australian dollar is justified. And if it's going to be lower, I think that the market then will switch basically from the hawkish next decision to more dovish next decision, especially if it's going to be like 0.2 or anything more than that. Then I think I'd be in favor of shorts or short position on the Australian dollar. So far, I don't like selling Australian dollar because, let me share the screen. I can show some charts. Let me share the screen, which is here. No, trading view. Yeah, should be this one. I kind of like where Australian dollar is now, especially with pound and euro. I'm not going to trade euro Australian dollar, which I did for first 3 months when we started this live stream, but I'll be sitting on the fence because of the ECB. But then the pound and Australian dollar looks very solid. I think what's going to happen now that we are going to continue towards the downside if actually the consumer expectation tomorrow, it's 2 hours after the midnight, are going to be again at 3.9%. If that's what's going to happen, I think that GA it's going to go further down and create new lower low from this one, which is almost already happening. And I, at the same time, think, and I'll need to check on the market sentiment, that a lot of retail traders are just going to try to sell at this support. I think we at least will go towards the trend line, which is currently, let me see how much is that, which is currently about 200 pips. So if we get the 3.9, and the expectations will remain pretty hawkish on RBA next decision, I think that's possibly what can happen with this bullish momentum on Australian dollar, bearish on GA. It's likely to happen. I don't think why not. But then if we get anything lower than 3.9, I'd be expecting some sort of a reversal before we touch the trend line, which is, I think, from weekly time frame. Yeah, weekly time frame. And something very similar is happening on GB, on pound and New Zealand dollar, where we have this zone basically. But I also believe a lot of traders will just try to buy the support, and I think we will break through at least on this level, which is again Angel's favorite fair value gap. But I think with that market sentiment, we're going to get lower. Let me double check on the market sentiment. But yeah, basically that's the reason why I think Australian dollar is now the strongest.
Yeah. Okay. Valid. Makes sense.
Yeah.
Makes a lot of sense.
Let me double check on the sentiment, so I can tell you whenever this is one of the examples for creating new high highs, lower lows based on the retails to test again the theory. So far, we are gold, euro dollar, so 242. Okay. Did you find anything interesting, Ken? Or
no, not really. Not really. Not at the moment. Yeah.
Jake, are we doing giveaways today?
Yeah. The 48-hour, I forgot on Monday. Not actually, I did not forget, but I was very busy on Monday. Sorry, guys. So today, again, the 48-hour evaluation challenge is on.
Let's go.
Jake,
yes.
can you check what source do you personally use for the retail market sentiment of like an asset?
Yeah, basically for big players, I go strictly with the COT report.
Yeah, fine.
And then when I go to retails, I have a couple of brokers that I watch. But what you guys can do is just type the pair. In this example, it's pound and Australian dollar. So you write GBP, AUD, and you add market sentiment. And then you want to find brokers such as IG, I don't know, the big ones. So you go for big brokers and you just open 10 tabs with different brokers who share the market sentiment, and then you do some sort of an average. So that's what I do.
Yeah, fair, my man.
Because the COT report also has the retail sentiment, of course, but it's delayed. If I'm not mistaken, it's 1 week or 2 weeks delayed. I think it's 1 week delay, but that's why I only watch it for the big players.
Yeah, fair.
So where is the... Yeah, sorry.
No, I was going to say, I'm sure. Basically, I'm trying to get up oil.
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 Yeah, people. I think retail's quite heavy longs at the moment on oil, which I'm quite surprised about. But I was just trying to. I read that this in via Reuters yesterday morning via the Zenith platform, and it was just basically saying that there's like 78% at the time of writing retail along oil. But when you look at oil firstly on the monthly chart is bearish. We've recently printed a potential lower high not long ago. We're stuck in this channel to the south at the moment, and we've got still this major supply going out from OPEC, a lot of oil being distributed being produced, and the demand's still not there. And I still like the idea of oil shorts coming all the way back down towards maybe like 50 bucks WTI.
Oh, towards the 50.
Yeah,
all
man.
the way down.
Yeah.
Okay.
Yeah. So yeah, I mean, if you look at the monthly, it looks pretty damn bearish. I think we're just
oh yeah, it is bearish.
yeah.
All the way down to creating new lows,
Yeah.
which are currently set at about $55 per barrel.
Exactly.
Okay, that's a high possibility. That's very probable that we can go all the way down, especially if the production is now extended, as you said. Or yeah,
it's yeah, it has been. I mean, it's what are we doing now? It's that OPEC plus output hits 2.5-year high. So it's high. You know, they agreed a few days ago to further boost output from October, bear in mind as well. So it's already at a 2.5-year high. And then from October, they're boosting it even more. So, and I just don't think the demand's just not there. It's not meeting with that supply. So I think this is just, I don't know what the retail guys are doing right now buying, but I'm keen to short this, to be honest. I'm keeping an eye. Potential swing shorts.
Wasn't trading oil probably like last live stream 2 months ago. But since then, I haven't traded oil. But
I think I haven't touched oil in 8 years trading right now, and I never traded oil in my life. It just
fair.
It's different.
Fair. Did you, Angel? I don't know. I know you haven't touched it, but did you ever see the time when oil prices went to negative? Did you see that?
Oh yeah, of course. That was crazy times. The people were trying to buy. That was crazy. And whichever caught actually that low made a lot of money. I mean, it was crazy. Yeah, it was crazy. I can remember that.
Yeah, man. It's interesting. Very interesting. Yeah. So, I don't know if for anyone that doesn't know, I need to refresh my memory on the actual technicals around it. But basically, obviously, people trading oil via futures contracts, and obviously people had futures contracts that are coming up to maturity, and basically they couldn't offload these contracts for whatever reason, and they were going to take delivery, because with these future contracts they're going to take actual delivery of barrels of oil, and obviously they can't take delivery of those barrels per oil, so people were just selling, trying to just get offload the contracts. And then people were just willing to sell it for not like negative, basically for nothing. So they didn't take fulfillment of the barrels of oil that they're going to be receiving on maturity of the futures contracts. Jake, is that correct from your understanding as well?
Yeah, I think you're spot on.
Yeah,
I think you're spot on.
Yeah, man. Yeah, it's interesting. It's really interesting. Right, obviously during the pandemic as well, understandably. So yeah.
I'm just trying to watch. I would love to go for the GU long, because I'm just afraid of tomorrow's CPI data. But this setup looks also very good. I mean, I just checked. The market sentiment is about 58% towards the downside on the retail part. So if tomorrow I'll see in the London session spike up to anything above 60%, going to, on a sell side, then I would love to trade it back towards the 1.36, which haven't been hit so far. It depends on the provider.
Yeah, makes sense.
At least on this one, it was not, which is about 60 pips. So I'm just afraid of the CPIs. But yeah, I'll probably give it a go if the market sentiment is actually in the morning higher than what it's now.
Okay. Yeah, I mean, I like the look of GU longs, but I want to see 36 being broken for swings. But yeah, I like it. I like the idea of longs at the moment. Yeah.
Yeah, I think if we hit 36, then I think we're gonna get probably a breakout a little bit, then a correction where I would like to enter in case we do. But it can go all the way up if we're gonna get lower inflation tomorrow from
definitely
from US.
Just quickly, I guess just ask you guys' opinion. So are you guys Obviously, look, fundamentals can obviously change it, but who's bullish and who's bearish dollar right now? Jake,
Yeah.
what are you? What are you, bullish or bearish? What way are you calling? What's your
Dollar?
prediction?
Yeah. I'm bearish on dollar at this
bearish.
moment.
Yeah.
Bearish.
Angel, what about you?
I'm pretty much neutral because I want to see that low, but we can actually wig out of that low with a lot of speed and aggression. So I want to see what's going to happen pretty much tomorrow. But keeping in mind that low, it might take EU and EU higher to take that low. So that's something to keep in mind. So if you ask me for an expectation for tomorrow, I think we're going to whipsaw the entire price that we have right now. Definitely. So we're gonna trick everyone, sellers, buyers, and then we're gonna give a real direction for the price on the entire on the rest of the month. So that's tomorrow, guys, be careful. Just be careful.
That's a very good prediction, actually. That's a very good point. It could get very messy actually tomorrow because Mark is just going to be trying to interpret that. Like, so yeah, that's a very good point.
On both fronts, actually, the euro and the dollar, the US dollar, the US inflation can mess up a little bit the next Fed decision. At the same time, what's going to be said on a press conference after ECB decision is going to be also very important. So euro and US dollar is going to be tomorrow a roller coaster. Could go up, down at the same time. So yeah, probably what best if you want to trade it safe, it's best to just wait for both to be.
Or you can trade London if we sweep any of these Asian sides and take the other side of Asia and being done before the CPI. That's actually a good plan that you can take tomorrow if it happens.
Yeah, agreed.
Yeah, I'll probably update if I'll be taking in the morning just for the London session till the ECB rate decision. If I'll be taking the longs on GU, I'll let you know in the Discord. But so far, I'm a little bit afraid of it. So we'll see. We'll see where it goes. I don't want to mess up my EAD account now when I'm 3 wins in. So I'll be taking it more carefully. Okay, guys. I think we're good to go. Do any of you have anything else that you would like to discuss, or you also good to go?
All good, man. All good.
All good.
Yeah, we're ready.
Yeah.
Perfect. So again, guys, thank you for being here. Thank you for being active in the chat. We appreciate you, and I will announce the winners of the 48-hour evaluation challenge in the Discord server. So I'll see you again on Monday. You too, guys.
Guys.
Yep. See you guys.
Take care, guys.
Bye.
Take care. Bye-bye.